maybe I should be a buyer. There's no contrarian. There's no individual asset allocator. It's full automation, and the market would go straight down in that scenario. So that's one danger, obviously, and I have a scenario on that in my book. Now you combine that, take what I just said, with deepfakes.
Right. Yeah.
Maybe we could do
Ray Dowell. Yeah, you have that scenario in the group where there's a synthetic video of Fed Chair Ray Dowell, as you call him, delivering rape remarks that he never gave. And
correct.
You describe this very vividly, how they don't just fake the voice, they train on thousands of hours of real speeches and testimony and Jackson Hole footage. They replicate room acoustics, and then they replicate the wardrobe. And then you describe how they digitally clone the most powerful central banker in the world giving a speech that he never gave. And then you go on to say how there's a fake press release posted on the Fed website, which is hacked to validate the speech. Media outlets pick it up immediately. Trusted sources, Bloomberg, CNBC, they amplify it before there's any verification. And as you say, within minutes, the markets are reacting. And then it's not just the humans panic, the AI trading systems are trained to react to language cues. They scrape headlines, they pause speeches, they respond in milliseconds. Talk us through that scenario, because it's terrifying, and it's actually very, very conceivable. I mean, when Powell came out and said that the Department of Justice was investigating the Fed, that wasn't so dramatic, but that was very out of line for Powell to say. And I initially thought, is this real? Is this a deep fake? Could it be a deep fake? I mean, it's very conceivable that we have a scenario like this right on the horizon.
Well, first of all, that's exactly right. And I make the point, I say, look, here's the scenario, and, thinking through this could happen. You should be prepared for it. What are the solutions for this? But it's already happening. That's the thing. The Republican electorals, I showed John Mearsheimer the other day, Victor Davis Hanson, others, where technicians are creating deep fakes of them giving speeches and seminars that they never gave, and they're like fighting it. But good luck. I mean, you're fighting a losing battle. Mearsheimer called it whack-a-mole. So the technology is there. There was a New York Times reporter who actually went to one of these deepfake companies and voluntarily gave them her voice recordings and pictures and all that stuff. And they created a deep fake of her with her consent, and she showed it to her mother, and her mother couldn't tell. So if your own mother can't tell, then the general public can't tell either. So all this technology is out there. It's being used. There are plenty of deep fakes around. We'll see more of it as we get into the midterm elections. Could you do it with a Fed chairman? Absolutely. It's not even that hard. But then behind, and you described it brilliantly, Michelle. I mean, that is the scenario. But behind that, there were 3 or 4 players. And one of them was a couple of hedge fund traders. I put them in Mallorca. Mallorca it's a beautiful place. I've been there the last Palmas, and if you're going to take down the world, it's a nice place to do it from. But I also have a Chinese cyber warfare unit as well. And so the crooks in Mallorca, they're the ones kind of creating the deep fakes and putting it out there. The servers are in the Congo. Good luck finding those, etc. But the Chinese cyber warfare unit, they, and military strategy, you look for something called the force multiplier. And what that means is you've got a certain power, a certain weapon you can use, but you like to use it in a situation where there's something else going on that makes the weapon even more powerful. So if you were going to take down the markets, you could just, and this is one of my scenarios, they hack into the order entry system at Morgan Stanley. By the way, I like Morgan Stanley. I know Jim Gorman is a great guy, recently retired CEO. And just put in, sell Meta, sell Alphabet, sell Apple, et cetera. So you could basically hack the system, put in all these sell orders, and the market would go down before you could stop it or hit the kill switch. This actually happened, by the way, something like it about 7-8 years ago with night trading. And the night trading system started flooding the market with sell orders. The problem is nobody could find the kill switch. It's amazing how things always go bad, not one at a time, but 2s and 3s. Like the person who has the kill switch, it's her day off.
Think about what Jim Rickards is saying here. The scary part isn't that AI might become smarter than humans. The scary part is that financial markets are already heavily dependent on automated systems. If a convincing deepfake can move markets before the truth comes out, trillions of dollars could disappear in minutes. And before we continue, if you enjoy deep financial analysis like this, make sure to subscribe to the channel and turn on notifications so you never miss these critical market warnings.
So where is she, So stuff like that has actually happened. But in this scenario, if you're China and you want to take down the market, you don't do it on a day when the market's going up because you're kind of swimming upstream. You do it on a day when the market's going down for other reasons, and now you pile on, you're swimming downstream, and you're having more effect. So in my scenario, the crooks, the hedge fund, sophisticated hedge fund hackers, they're pushing the market down, and the Chinese are watching this and saying, hey, here's our chance. Let's use that down market as a force multiplier to make it go down even more. And then that's what happens. Then you get the deep fakes and the panic and everything I described. It's the interesting thing about doing a scenario or a forecast of that type, the book is nonfiction, but if you're doing a forecast, almost by definition, you're writing fiction because it hasn't happened yet. But I put it out there as a warning, like, hey, all this technology exists, it's being used. Look out for this. This could happen tomorrow.
Right, and you talk about how social media exacerbates the kind of reactions, how that so easily triggers bank runs in seconds, in minutes, which really doesn't even allow time for a response. You can have a deep fake, you can have market manipulation, then you have the reaction amplified through social media and the rapid rate in which this information is conveyed. So AI can easily trigger a major market crash. It's a threat that seems so real.
Right.
Is it being factored anywhere? Is there some level where this is being addressed that we don't know about? Go on.
Yeah, not really. I mean, I was colleagues and partners at various times with David Mullins Jr. David was the vice chairman of the Federal Reserve. But before that, he was Assistant Secretary of the Treasury at the time of the 1987 crash. October 19th, 1987, the Dow Jones went down 21% in one day. One day, not a week or a month. In today's Dow, that would be 10,000 points. It would be a 10,000 point drop in one day. That's what happened. But we worked with Nicholas Brady, who was the Secretary of the Treasury at the Brady Commission, but he was the guy who invented the circuit breakers that we have today. Well, the market's down a certain amount, take a time out, reopen, 15 minutes, it goes down again. And just to try to give people time to talk. My point is, in the age of AI, circuit breakers don't work because, again, in effect, the robots have taken over. It's not a question of people talking to each other and saying, hey, I'll be a buyer, we'll prop the market up. You don't really get that chance with computers controlling everything. But I never do scenarios like that without offering a positive solution, to put it that way. And I recommend the use of cybernetics. Cybernetics comes from a Greek word, but originally means the helmsman, or the person who steers the boat, so to speak. But the way you could use cybernetics in a situation like this, and the metaphor I use is, driving on snow is hard, but driving on ice is impossible. If you're driving on ice and you slam the brakes, the car's going to keep going. It'll probably skid out of control and go off the road, but the car is not going to stop anytime soon if you're on ice, and that's why the circuit breakers don't work. So what do you do if you're driving on ice and you need to slow down? The answer is you don't pound the brakes, you tap the brakes, tap, 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 two hands on the wheel, slow it down gradually, and then keep it under control. The way that would work in the stock market meltdown scenario is at a certain percentage down, instead of shutting the market, just say, you know what, we're only going to execute half your order. So if your sell order is 1,000 shares, sorry, we're only going to execute 500 shares. We're going to put the rest in the queue. And then if it goes down more, it's a 90% break. So 1,000 share sell order, we're only going to execute 100, and then put the other 900 in the queue, et cetera. So that's what I call tapping the brakes as opposed to shutting the market. And that should slow down the momentum a little bit. It's not a perfect solution, but it's better than the one we have. But the short answer to your question is no. These things don't get addressed until they happen. Everyone runs around saying, whoa, what just happened? What should we do?
What makes this threat different from previous financial crises is speed. During the 2008 crisis, people still had time to react, analyze information, and make decisions. In an AI-driven panic, algorithms could execute millions of trades before regulators even understand what is happening. That's why many experts believe the next financial shock could unfold faster than anything we've seen before.
I'm trying to warn people that it could happen and suggest that we should put some safeguards in place today.
Yeah, a chilling warning. I want to read a line from the book because it is, in fact, very chilling. After the scenario that you describe, one of the characters, Sarah says, "Oh, didn't you hear? Our bank was closed by the FDIC at 6 p.m. this evening. They're only insuring deposits up to $250,000. People forget that. The $30 million in the account was replaced with receivership certificates. Those can only be redeemed with bank asset sales, but the bank assets are impaired. For now, all the money is gold." And then you write, "Nick was numb, too numb to care much at this point. There was not a thing he could do. He took another sip of the daiquiri. 'Is there anything left?' he asked. 'Just the gold,' she replied. Just the gold." What's the message you're sending then, Jim?
Well, have some gold. Not 100%. It shouldn't be 100% in anything, but I've always recommended a 10% allocation, physical bullion, and safe storage. ETFs, gold ETFs, they're fine for price exposure if you just want to bet on the price going up or down. Okay, but it's not gold. It's a share of the trust on the New York Stock Exchange. So have some physical gold, and that's something that won't actually will perform very well on the kind of scenarios we're talking about. But the point is, it can't be frozen. It can't be locked in by the FDIC or the U.S. government or anybody else. So that's your reserve. By the way, Michelle, one footnote, you described a scenario between Nick and Sarah. I like daiquiris, by the way. It's hard to get a good one, but the American Bar of the Savoy does a good one. But Sarah, in the scenario, and you read it correctly, is a robot. She's the robotic trading assistant for Nick, who's a human. But so even he's talking to a robot when they're going through all this. But she has a nice voice and she gets it right.
Yes, Sarah is like Siri, I suppose. And yeah, I'm a fan of a good strawberry daiquiri every now and again as well.
Yep.
I'm more of a pina colada type, but I could have a nice strawberry daiquiri every now and again. And you may need that, if the world is coming to an end. You do say though. You did touch on this idea of moneyness, and I know we're running out of time, but I think that this was also a very interesting concept, and that you're right, that today we don't know what money is, we know moneyness. Right. What is that? What do you mean by that?
Well, we've sort of lost the thread. I mean, you start with the Federal Reserve. They have money supply numbers. Notice I said numbers, plural. So there's M0, M1, M2, M3, etc. Even the Fed doesn't know what money is because they have 5 different definitions. And then you can get into all the foreign currencies, Bitcoin, all the cryptocurrencies, decentralized finance, DeFi, they call it, et cetera, on and on and on. And so what is money at the end of the day? My point is we're kind of losing the thread. We think we know what it is, but we don't really. And I make the point that I talk about Marcel Duchamp and Andy Warhol. And just kind of quickly, in the 1930s, Marcel Duchamp, he had a branch of applied mathematics that no one has figured out to this day, but maybe they will eventually. But he in his mind, he came up with a system to beat the house at Monte Carlo in roulette. But he needed money to go gamble. So he issued a bond. And the bond had a picture of him, and Man Ray took the picture, and they used shampoo to make little horns. It was supposed to be like Mercury, the wind god, but some people think it looks like the devil. The bond has a roulette table, but it has normal terms, interest rate, so-and-so, payable on this date, et cetera, signed Marcel Duchamp. And he sold about 15 of these things, I think, for, 100 francs a piece, and got the money, went to Monte Carlo, lost all the money, his system never worked, but anyway, so that was that. So people kind of laugh about that, but what happened to those bonds? Well, the answer is they have outperformed French government debt, the French franc, U.S. government debt, every financial asset you can think of since the time they were created. They're works of art, but today they're valued at, $500,000 up to $1 million each. Because they're one of 10 or 15 works of art signed by Marcel Duchamp. So my point is, it was treated as a gag at the time, but as a bond, it's outperformed everything else you can.
The bigger question is whether governments and central banks are prepared for a crisis like this. Markets today are more interconnected than ever, and a single event can quickly spread across banks, stock exchanges, and financial institutions around the world. As AI becomes more powerful, the challenge will be maintaining trust in a system that increasingly operates at machine speed.
Think of. So I always say the artists always get there first. Andy Warhol once said, people who buy art, they're just trying to show that they have a lot of money. They take money, they buy the art, they hang the art on the wall to impress their friends, and then eventually somebody sells the painting and they get the money back. He said, why don't you just take a big bag of money and nail it to the wall, and that'll impress your friends. And he actually painted a whole series of paintings which were just dollar signs, a long series of Andy Warhol. But my point being, in their own way, these were artists who were creating works of art that have helped retain value better than stocks and bonds and almost any alternative you can think of. And so is that money or is it art? Well, it's kind of an open question. But the point is, knowing what money is actually a lot more difficult than people realize. It's based on trust. And anything can be money. When I was a kid, I had an uncle. He was a small-time mafioso, but he wore a white suit, and he used to, people like to give kids advice. Hey, kid, don't take any wooden nickels. As like an 8-year-old, I was like, what the heck's a wooden nickel? But in the Great Depression, towns and cities in the Midwest made wooden nickels because there was no money. So it shows how adaptable people are. If the main money system fails for 100 different reasons, people will invent other forms of money because they have to keep doing exchange. They have to buy goods and food for their family and so forth. So my point is, we don't really know what money is. Many definitions, maybe the artist got it right, but don't underestimate human adaptability and the ability to come up with new forms of money to replace the ones we already have.